As I'm speaking to you, Bitcoin is currently trading around $92,000. You see, we've been in the red for about 2 days now. Why this pullback? Why this breather? And above all, we're going to revisit Tomley's theory, the famous 5-day rule, and why this could be positive for this year. We'll also go back over the MSCI, which is correlated with MicroStrategy, that infamous FUD that just pushed the market down even further. Crypto, but before we start, at the beginning of the year, it's always about those first resolutions. And if you want to have a clear strategy, if you want to be guided by the best coaches, crypto and myself, so that we can optimize your portfolio according to your vision, analyze your profile, and see TTP, the entry phases, the exit phases, and so that you also have access to an exclusive community, as well as my entire network and all my best tips. Well, you have my club right here. There are 10 spots available exclusively for this month of January at the start of the year. It's an exclusive offer, so don't hesitate to apply. And then a member of my team will contact you depending on your level of motivation and commitment. But let's get started and kick off this daily session with a quick overview, of course, for the club. I'll put the link in the description and in a pinned comment as usual. Anyway, let's start this daily session with a quick overview of the market via crypto bubble. And what we see is pretty logical for the start of the week. You can see that this week we're in the green, there's a huge rebound, and on the weekly chart it's looking pretty good. And the majority of the top 100 are showing gains of over 20% in the past 7 days, which is a clear sign of a strong comeback across the entire crypto market. However, if we switch to today's performance, I'll get there, it's in the red, and that's perfectly normal. If you're wondering why there's been such a strong pullback over the past day or two, you should know that after such a violent surge, a period of consolidation is inevitable. And we're not seeing any sign of a trend reversal at all. It's simply a natural round of profit taking after several consecutive days of gains. So nothing alarming at this stage. If you're asking yourself that question, I'm also here to reassure you. I've been in the crypto sector for 8 years, and I'm speaking from my experience, technical analysis and macro geopolitical analysis, including what's been happening with Venezuela in recent days. But again, nothing alarming at this stage if you see some red after several days in the green. Let's get back to Tomley's theory. But just before that, let's move on to what's happening in the traditional markets. Because, it's strongly correlated with what's happening in the crypto market, since it has a huge impact on the overall risk climate. And the S&P 500, which, let me remind you, includes the 500 largest companies. The most highly capitalized in the United States have just hit a new all-time high. So that's what we call a historical record, meaning when the price breaks its previous highest price ever. And now we're up more than 44% compared to the low in April 2025. And that's simply colossal. So what you need to know is that in just a single day, in one day alone, $500 billion were added to the capitalization of the US stock market. And when the indices skyrocket like this, well, it means that liquidity is coming back, that investors are regaining confidence, and above all, that risk is becoming attractive again. And as you know, when the stock market is at its highest, the crypto market breathes easier. And for the past few days, that's exactly what's been happening. But now let's move on to an extremely important point to understand the current macro climate and why risky assets, including Bitcoin, are benefiting from this context. Well, quite simply, American tech is accomplishing something remarkable, something that's never been seen before in history. That's why the market is reacting so positively. I like to explain the why and the how to you. And the communication services sector of the S&P 500 is showing an absolutely extraordinary performance. We're talking about more than 184% in just 3 years, which actually now surpasses the record set during the internet bubble of the 2000s. In the 2000s, it was over 155%. Now, in just 3 years, it's over 184%. It's simply huge. And since the bottom of the 2022 bear market, we're talking about a rally of almost more than 100%. You can see it on the chart here that I found for you. Behind this surge, there are two giants. We have Meta, which includes WhatsApp, Facebook, and many others, which has skyrocketed by more than 588%. I think at 588%, we can definitely say it skyrocketed. We also have the Alphabet Group, which represents Google, which is up more than 159%. Their weight is such that they've pushed the entire sector 39% above the March 2000 peak, which let me remind you, was during the COVID period. So it's a level that seemed completely out of reach for more than 20 years. And why is this important for us as investors? Well, quite simply because when American tech takes off like this, it's a sign that liquidity is flowing in and investors are taking on risk. Okay? And what you also need to know is that this kind of momentum historically always ends up spreading and moving toward the crypto market. And if the S&P 500 and tech continue on this trajectory, it creates an environment where Bitcoin and the crypto sector only need a pretext or a simple spark to surge upward. So, to further illustrate this profit-taking dynamic that seems to be returning at the start of this year, there's Tomley's theory, which I've actually put in the thumbnail title for you. Because Tomley reminded us, though I probably do not need to introduce him to you, he brought up an indicator that a lot of people underestimate, and yet it has been working for over 10 years, the famous rule of the first five. Now, just because everything seems to be pointing in that direction doesn't mean it's going to happen. There you go. Just a little disclaimer. But according to him, the market's performance in the first 5 days of the year, as we can see here with Bitcoin, where all the candles are green, every time we've seen 5, I'll come back to the sharp drop here. Every time we've had the first 5 days of the year in the green, it often sets the tone for the rest of the year. And historically, since 1950, when stocks finish those first 5 days in positive territory, the year ends up in the green almost 84% of the time. 84% of the years end up positive, and with an average performance of about plus 16%. Conversely, when the first 5 days are negative, the markets end the year with an average gain of just over 3%, which is still positive, but the probability of an increase is much lower. Now, it's also important to know that the S&P 500 and all assets are also there to fight against inflation, because that's why it's so important to invest. If you have inflation at 8% and you do not, well, if you just let your money sit in your bank account where it earns you nothing, or at least not more than 8%, you are technically losing money. So why is that? Why does this 5-day theory work, and why am I telling you about it today? In fact, of course, it's not magic. It's simply a matter of risk appetite. And if, since the beginning of the year, money has been flowing in, it's a sign that investors are willing to take risks. And if the market, and also it's because returns are very low on the other sides. So bonds, as soon as rates drop, interest rates go down, bonds go down. And actually the interest and interest rates, even on investments, even on traditional counter-cyclical ones in the United States. For example, I have some for my business, I have some for my personal account. I was around 4%. And as the rate cuts take effect, 0.25% recently, and we're talking about roughly 1% over the last 3 or 4 cuts, that's 1% less to earn on standard accounts. It's as if on your checking account in France, instead of 0%, you had 4%. And when you go from 4% to 3%, you think, I'm losing out. 1% automatically. So maybe that money, I should invest it, I should put it into assets where I could potentially earn more than 3%, or at least make up for that difference. And that's why if the market starts off sluggish, it shows that hesitation is prevailing and that rallies are rather hard to sustain. And this logic applies even more to crypto, because the market is entirely driven by momentum, by confidence, as we've seen. That's also why on Kojo we've included different indicators. Short, medium, and long term, which together form a panel that brings together quite a few indicators like RSI, fear, confidence, and also liquidity. But it all relies on momentum, on confidence, and on the speed at which capital reallocates itself to these kinds of risky assets. And actually, the flows at the beginning of the year give a fairly precise indication and actually allow us to answer this question. That is, are institutions entering, or are they just observing? Are they watching instead of acting? Given the current context, this is a signal that really needs to be monitored closely, especially since MSCI has just put an end to one of the biggest FUDs of the year. Clearly, this changes the game for the market. I mentioned this to you a few weeks ago, so stay tuned for a few minutes, because the organization, MSCI, has announced that it will keep these companies in its indices, including treasuries, whose reserves are mostly exposed to Bitcoin and cryptocurrencies. So in other words, MicroStrategy and all the companies, everything that's Bitcoin native, will not be excluded from the MSCI indices. As in fact, as had been suggested at the end of the year, because let's not forget, it was precisely that kind of speculation that amplified the crash of October 10th, 2025. So it was a flash crash that wiped out, remember, $19 billion in a single day, even though I think the numbers are manipulated. It was much more than that. And indeed, if MSCI had excluded MSTR, meaning MicroStrategy stock, all the index funds would have been forced to sell massively, even at a loss. And that would have triggered a major reset in the market. And that could have forced MicroStrategy to reduce its BTC reserves. Let me tell you, they have quite a lot, which could have triggered a cascading panic across the entire market. Because if people know that MicroStrategy is being forced to sell, what are investors going to do? They'll sell before it happens, because this is a company where all that information is available and you can anticipate it. So this announcement puts an end to months of FUD about a potential forced selling of several billion, that is a forced sale. By the way, it's also a message indicating that institutions are ready to get involved. And not just temporarily, they're ready to include Bitcoin in their models, as well as in their indices and strategies. There will be fewer structural risks and less pressure. Potential selling pressure will decrease, so there will be more stability for players exposed to BTC. So objectively speaking, this is extremely bullish for the entire market. Crypto, I had to tell you about it. So we can erase that January 15th date, which was kind of like a sword of Damocles hanging over our heads. If you're interested in this kind of information, thank you for all your feedback. The video about Venezuela, which turned out to be true, I got a lot of positive feedback. People said, hey, Julian, you still had some energy there. Francois, thank you if you're watching me. You're part of my team. He said, you have energy. I think the fact that you left for a bit, right now I'm in Bali for a few days, well, for 2 weeks now. I'm trying to relax, to take in a bit of the Balinese spirit, and above all, to get a little perspective on the market. And it gave me energy. So thank you in any case for all the energy you put into your comments, all your feedback. The holiday season is over, and now it's 2026. We really have to get started. We really have to get started. This year, right from the start and all throughout the year, in Kojo mode. Anyway, I also wanted to talk about Bloomberg, which is setting the tone for the start of the year, because the Bitcoin spot ETFs are entering 2026 like lions. And here we can say they've already recorded $1.2 billion in inflows in just 2 days. And that's exactly the kind of flow we saw during the strongest expansion phases of the market. Remember, because spot ETFs represent the simplest and most regulated institutional gateway to Bitcoin. And when these products attract so much capital, it means that asset managers and financial advisors are increasing their exposure. They're allocating more, and by the way, we'll talk about another bank right after this, but they're also providing more advice regarding this type of asset. And we also have traditional investors who are starting to reposition themselves after the correction at the end of 2025. So, we're not talking here about a technical rebound driven by retail investors, but rather, clearly, these are net buying flows that are traceable on the blockchain. These flows are consistent and are generally very difficult to counter. By the way, maybe in a few days or a few weeks, we'll have those famous 401k plans, those retirement savings plans, where, in fact, Americans will be able to regularly buy Bitcoin, that's for sure. But to get back to ETFs, when spot ETFs are activated like this, the crypto market generally follows upward. Now remember, there are always periods of pause like the last 2 days. After a big surge like we've just seen, there are always periods of pause. And then after that, things return to normal, there's accumulation, and then we take off again. Especially since, as I mentioned in yesterday's video, we have support here from 94,500 to breakthrough, potentially aiming for the $100,000 mark, which is both a psychological and technical level. And precisely as always, in this ETF context, we also have another major development. Let me find the information for you here. This time it's coming from Wall Street. If it loads, Morgan Stanley has just filed S1 forms with the SEC to launch Bitcoin and Solana trusts. Now, we're not talking about a small player here because Morgan Stanley, in fact, that's $6.4 trillion in assets under management. And when an institution of that size repositions itself or takes a position, it's rarely just to test the waters. It's because their clients are demanding it, especially the wealthiest individuals. And actually, this filing comes at a time when the regulatory environment has become much more constructive. Knowing that we're expecting a very important law soon, which has been slow to arrive, but possibly it could happen in January, and that could change things. Specifically, this regulatory framework would bring precision and clarity to the market. In other words, now the ground is ready. When we look at Morgan Stanley, the ground is ready because the flows already exist. And Morgan Stanley doesn't want to let BlackRock and Fidelity get too far ahead. By the way, maybe this year we'll see Vanguard, which is one of the big giants, and they've said they'll start offering Bitcoin products, but not within the institution itself. Maybe that's coming. And what's most important is that these trusts aren't just aimed at the ultra wealthy. They're also targeting much broader wealth management platforms. And what you need to know is that every day, since the start of this institutional cycle, we have confirmation that crypto is being absorbed into the heart of the traditional financial system, not just as a speculative bet anymore. This time, it's being offered as a standard asset class to the same clients as stocks, bonds, or even commodities, which have seen a big rally in recent weeks. Let's finish with Michael Saylor's analysis, which I find very important because, as is often the case, it actually sparks reactions. Because for him, in fact, the Bitcoin bottom is already behind us. Because according to Michael Saylor, who is the CEO of MicroStrategy, just to remind you, we have the early OG whales, meaning the big whales, the old whales who simply took their profits in the $100,000 zone. That's according to Michael Saylor. So that's a fairly typical behavior. At the local top, and that's what triggered a healthy correction down to the mid $80,000. So nothing to worry about, according to him, because he even points out that this is what we call long-term noise, meaning noise over the long term. And above all, it should not be confused with a cycle reversal. So, since the low we experienced, Bitcoin has shown exactly what we expect from a bullish asset, meaning it first stabilized, then absorbed the selling pressure, and is now gradually making its way back toward the $100,000 mark. Now, that hadn't happened yet. Maybe it won't happen overnight. We're at $94,500, which has already surged, but in his view, which remains extremely long-term, Bitcoin even surpasses gold as a reserve asset. Not just because it's rare, but because it's portable, verifiable, and impossible to dilute. Let me know in the comments what you think about it. Don't hesitate to apply for the club here. You just have to fill out the form. If you're motivated for this year, if you want to crush it, if you're tired of 2025, if you didn't have a strategy, you don't know how to buy, you don't know when to sell or what to invest in, you'll have my entire highly professional team with the 2.0 program. In short, you're going to have a blast in the club. Don't hesitate to apply, and you get a free call. With Francois, the one I mentioned earlier, who's part of my team, Francois and Alexandre will call you. They'll review your strategy and give you advice. It's completely free, a free call. And then, if you're motivated and have the right profile, we'll offer you the chance to join the club or not. But after those 45 minutes to an hour, you'll leave with tips and a new perspective. And maybe that'll give you a bit more clarity to help you become a successful investor. So I'll see you very soon. But most of all, I'll see you tomorrow. Let's set a date. Right now it's Wednesday, so let's meet up tomorrow, Thursday, for a new video. Don't hesitate to like, subscribe, share with lots of people, and comment to give your feedback. Because I really like getting feedback from the community. And I'll see you tomorrow. This was Julian. It was a real pleasure. See you soon. Bye-bye.